So have you ever been asked about matching a trial balance and tying it back to the last tax return? If I say those words and you're like, what is she talking about? It is one thing that you need to know as a bookkeeper. It's very important that when you get a new client, that you understand where the starting point is. And the starting point, you're like, well, I just got the QuickBooks file. 2024 was reconciled, so 2025 should be fine, right? Well, not always. And so when I get a new client, I always ask for the last tax return, or I say, can you do an email introduction to your CPA? I'd like to get some data to make sure that the data in QuickBooks is correct or is ready for the starting point. And I'll try to explain to the client that I need to make sure that my starting point is the same ending point as the last tax return. And that sounds like it should be, right? December 31st, 2024, start on January 1st, 2025, they should be the same, right? Well, not always. And I would say 90% of my client files were not matching back to the trial balance. They were somehow the client had gotten in there and dinked around and done something, or deleted stuff that was old, or created payments in one year and then created the invoice in another year. And so it does throw things off, and you do have to pay attention to that. So this is what I do. Here's the steps. One, you're going to do the email introduction to the CPA and say, hi, I'm Lynn Talbott. I'm the new bookkeeper, and I'd like to make sure I have everything in order so that you have what you need to do the taxes. I want to make your life easier. And so then the CPA is going to be like, oh, I like this person already, and they're going to give you what you need. And so you'll ask for the trial balance and then the last copy of the last tax return. And what I do is I create a little folder inside the accountant folder, in the shared accountant documents there inside QuickBooks Online. I don't want to keep people's tax return on my computer or in my G drive in case somebody gets into there. I just don't want that. So I put it all on QuickBooks, and I use QuickBooks and trust QuickBooks that their system won't be compromised. And if it is, I have put that in my contract that I trust their system, and I can't control it if QuickBooks gets compromised without something that I've done. So that's the reason I put it in the accountant file. I'll just create a little thing that says tax information or year-end tax information, and I'll do one for every year. And I'll put it in there. The things I put in there will be the depreciation schedule. I'll put in the trial balance and the client's tax return for that year. And then anything else that I might be corresponding with the CPA about, maybe a HUD statement that they bought something, or maybe an inventory sheet that the client's given me. And I'm like, here's the inventory sheet, anything that the CPA might need for year-end taxes. I'll also put 1099s, 1098s in there that the client has received. I will put those in there so the CPA can have them too. So it's a nice place you can share the files. Most CPAs don't know about that shared document file. They don't really want to bother with that. They just email you the stuff. So that's a hint there. So you're going to ask for the trial balance and the tax return from your CPA. Once you get them, put them in the file. Then you're going to go into QuickBooks, and you're going to run a trial balance for that tax year. And you just go into QuickBooks, run the trial balance, and then you're going to look at the trial balance that they gave you, and you're going to go through each one. Do. And if it is not the same, you have a problem. Somebody has gone in and changed something since the tax return was filed. And we know that if you don't go in there and sort of lock that file, they call it closing the books in QuickBooks. If you don't go in and lock the file and close the books, we know that is a problem, that clients keep doing stuff, or we keep doing stuff. I've caught myself doing something and been like, oh man, I think I just messed up this, year 2023 or something by tying some kind of payment to it, or trying to get rid of some vendor credit so I can clear it out, realizing that I may have changed the actual, tax return in QuickBooks. I like the QuickBooks file to match the tax return. That's your whole goal. If the CPA has their own books and they say, well, you don't need the trial balance, it doesn't matter, I have the taxes over here, I don't like that. I say, I really work hard to make sure the QuickBooks and the tax returns match. And so if you'll get that to me, at least I'll get it up to date, and then you can do whatever you want, Mr. CPA. But after the CPA starts to trust you, you will find that that they will start giving you all the information. Like, oh yeah, let Lynn do the depreciation, let Lynn match the tax returns and all that. So you go in there and you do the QBO. If you find that the trial balance does not match, you're going to go to and click on the adjusted trial balance, and you'll enter what it's supposed to be, the year, and just enter it all, what it's supposed to be. You'll also find that the chart of accounts probably is different. The CPA is going to have their own wording for some things, and you're like, I don't have that chart of account. So you're just going to have to do the best you can and use what you can and use what's similar. You're just really looking for chunks. Are the assets the same? Are the liabilities the same? Are the loans the same? The bank accounts, like that's really what you're looking for. So if you have to put it in a different account just so it's in the same file type, you'll be okay. So you'll finish that up and it'll give you the adjusting entries, and then you can create that entry and go on and just write on there to tie trial balance to the last tax return. And I put my little initials on it, LT, that's what I did. Then you have the correct beginning balance and you can start working on the next tax year. So that's my advice for tying the tax return to your QuickBooks file. If you're not doing that, you really don't know if you've messed up something. And 3 years from now, if the client gets audited, they're going to say, why don't these books match? Who went in here and changed something? And we're all like, I don't know why they don't match. Like, I don't know. Nobody knows anything because I can't remember what happened 3 years ago or who got in there and dinked around and did something. So after you do that trial balance, you close the books for that year, and you do not, I put a password on it, and I actually don't even give my password to the client. I just don't. If there's somebody that gets in there and dinks around and stuff, if they find that on there, they'll say, hey, Lynn, you locked the books. I'm doing something. I'm like, what are you doing? And then I'll be like, you don't need to do that. Or if you're just changing maybe the vendor name or something like that, I'm like, okay, I'll do that for you. Thanks. And I'll have them send me the email and I'll change that. But really, keeping that file safe, because next year when you go to file the taxes, the CPA, and this is what happens to me all the time, I've got a couple of CPAs that in 15 seconds, that thing comes back and said, retained earnings changed. What happened? Your retained earnings should not change. It should only change by either the income or the loss for that year. If it's different than the income or loss, somebody did something and the trial balance wasn't correct. And so the CPA is going to call me on that right away. And if I didn't lock the file, I could have to spend 6, 7, 8 hours trying to figure out what happened, and then having to speak to the CPA and say, yeah, I goofed up. I forgot to lock the file, and my employee got in there and, did something with a payroll adjustment or just did something. But it's very hard to find, a year or two later. So that's my advice for you. And if you use this advice and you lock that file, your CPA will be happy, and then you'll be happy at the end of the year. Let me know in the comments below what you think about this method, and if you actually use this method and close the client files, and do you give your password to your client? And I usually just use an easy password that all my employees know, so that if something happens, we can go in there and change it. The other CPA can always change the password too, so it's not really that huge a deal. It just means that the client can't get in there and dink around. I'm Lynn Talbott, the Bookkeepers Coach. I'd love to talk with you and have you learn more about what we do in the training circle. We talk about these things every day. So this is just the tip of the iceberg. If you like this video, check out our podcast, The Better Bookkeeper Show, now available on Spotify or wherever you find your podcast.